Good evening, everybody. All right. Today, as we saw, the Dow did close back below the T-line. So what assessments do we make from that? Number one, first thing is we're probably going to have a sell-off. Not necessarily a big sell-off, but the fact that the T-line's been acting as support all the way up ever since our McMuffin, more than likely, once they came up through the 200, they were going to come back at some point and see if the 200 was going to act as support. Which would be a little bit more, pronounced if the NASDAQ came all the way back down. So the other scenario is because it didn't close back below the T-line with any great apparency, except in the S&P 500, that more than likely there could also be a possibility that they take the markets right back up again tomorrow, which still gives us the impression that they're not closing below the T-line yet, that this is just a down day and an uptrend. The most compelling one that told us things weren't real terrible was the fact that the transportation index did a long-legged doji, which makes our analysis tomorrow fairly simple. They're going to move the markets in the direction of how they open after a doji. So if they open the transportation index positive and the others are opening a little bit soggy, it just means the market's going into kind of a consolidation or profit-taking mode, because if the markets were reversing, all the indexes would be heading in the same direction. The fact that the transportation index came from way down here back up to close right in the range, again, tells us there isn't that dramatic selling going on. It's just probably some profit-taking. Bond prices have come down pretty hard relatively to what they've been trading. The 10-year notes. So I say relative, we're still at such low interest rates. So this is kind of anticipation that there's going to be they're raising interest rates in December. All right, crude oil has pulled back, but this is why you always want to always check to see what the trend is. Notice on the crude oil, the trend has just been sideways in crude oil. So there's really no direction. Now, the opposite would be, Jim, can you help Stephanie? She's apparently not getting onto the charts. I'll be doing a video here pretty soon on trend analysis and trend channels. As we can see, there was a trend. Let me see if I can do the trend channel here. It was kind of, we could see there was this trend channel going on. When they broke it, this is live or lean hogs. When they broke it, we can see what the trend is now. And how long do we stay in this one? You stay short until you see a candlestick buy signal. The further away we move from the T-line, the more compelling it is that there's going to be a reversal soon. So I haven't played the hogs, but we can see what happened right up here when we had the dark cloud and then confirmation telling us that this level right here was going to act as resistance instead of a J-hook pattern. We had our double top. And then notice what happened this morning. They opened it lower after a doji. So what were we expecting? A doji sandwich. Anyways, they took the took cattle down the limit. So Again, this is kind of built into our targets analysis. Where's our next target? What's everybody else able to see? Probably a test of the low. And if they breach this level, what's your next target? Probably coming back down into the trend channel. So now, once again, does that mean it's necessarily going to get there? Who knows? We'll let the chart tell us what happens. But at least it gives us a level to start watching to see when there might be support and when to start watching for buy signals to at least cover short positions. So again, I'm going to be doing a session on trend channels. We can pretty much see what's happening here. We got kind of a wedge formation. Let me see if I can do this with any great elegance. You can see you got kind of this wedge formation. So what's that tell us about our overall trend? That it's probably not going anywhere. It's probably coming back to the bottom of the wedge. So at least we know that's a target that we can be looking for and start watching. Now, as you can see, this is Cocoa. Cocoa did hit the 50-day moving average today and the 20. So yeah, we use these on our charts because that's what everybody else is watching. We should be in a downtrend. However, if we see that our downtrend analysis, which is the wedge formation, is back here, but they start doing a J-hook pattern off the 50, now we have a completely different analysis. So we've had a wedge formation that was up, down, hit the resistance level. But this time, if they do a J-hook pattern, what's that tell us about our resistance level? More than likely, wave 1 and wave 3 being the same, that they could be breaking out of this wedge. Would you sell Cocoa? Yes. I'd be shorting Cocoa probably on a weaker open, and especially if it came down to that level. Again, if they broke the 50, what's our next target? This area, or basically the 200-day moving average. Cotton, kind of the same scenario. Make this a little bit smaller. Oops. Bigger. All right. So what do we see obviously happening as far as a trend channel? Pretty much down through these tops, and you can pretty much draw a parallel line through the bottoms. So notice where this failed up here. Bearish engulfing signal right at the 200-day moving average, and kind of topped out from the highs of the day up at this level. That's still implying they could be drifting this lower back down to the bottom of the trend channel. So there's nothing spectacularly scientific about this other than when a trend channel chart starts, that's what everybody's watching for. Basically, we have the advantage to see if it's going to get there without a reversal, and once it does get down here, what type of signals we might be we should be looking for. I'm also doing a video on the bobble, because we get a lot of questions on the bobble. Let's see if I can. Bigger. So here's kind of our bobble. They come up, they hit the resistance level area, they come right back to the T-line, support off the T-line, and come up through the resistance level. That means they're going to the next target. So there's two things that happen when you get to a resistance level. One, you can fail like this, then you see if it supports at the T-line and does a bobble. Or two, if they go through the resistance, then they usually come back and test it. When they come back and test it, we can see what type of signal it did at that point. We had a long-legged doji, and what do we know about the doji? We're going to move it in the direction how they open it afterwards. So if they pulled back, bounced off the 200, came back up and did a doji, then opened positive, what did that tell us about the 200? that it did act as, still working on the video on the options, Frank. Still, every night I put some more pieces together. Is the T-line crunch where the T-line meets the 50? Not so much where it meets the 50. You can see how the T-line keeps the price crunching right up through a moving average. So it's more the price staying above the T-line and the T-line coming up through that resistance level. Yes, an Apple is in kind of a bobble. So that's why you want to definitely see it close below the T-line to tell you the bobble is not in process. William, you might have to log off and log right back on again. Let's see, what else do we have? Oh, so another one that was a very clear, I say clear. There are some charts that are very easy to analyze. As we saw in KERX, came up, kind of did the bobble. In this case, they bobbled off the 20 instead of the T-line. But notice what it did when it came back up to the resistance level. There was our doji. Yeah, so the market is bobbling for apples. Yep. So a doji right on a resistance level makes a trade very simple. We know our rule of the doji. If it opens positive the next day, it's going to trade positive. It had a big candle to get there. Tells us this day and this day will be the same. And then what's it tell us about our 50-day moving average? That it's not acting as resistance. What's it telling us about our pattern? That we probably have a J-hook pattern in progress. And Labu. Uh-oh. How come Labu does not come up over here? That doesn't make a whole lot of sense. Bah humbug. For some reason, they don't have a Labu over on this service. TSRO. Notice what happened when it came up and hit the 50? Did the bobble. Now it's back up through. I would suggest there'd probably be a lot more upside to this one. And HRTX, same scenario. Came up, hit the 50, did selling, had one day below the T-line, but came right back up. So you've got two entry strategies here. More aggressive, you might be buying this one on a positive open tomorrow because that would be confirming your bullish engulfing signal at the T-line. You just have to be diligent when it gets up here to the 50 to see whether they can get through. Or a little bit more conservative, but a higher probability trade is if they close above or get up above the 50, that's when you can start buying because it's telling you the bobble is in progress. I tried that. F.LABU. That doesn't work either. Oops, maybe F.LABU. No, that one's not working either. I tried that. So DVAX pretty much in the bobble, which makes this very simple. If this opens positive and trades through the 50, you can be buying this one because you know you have the J-hook pattern bobble breakout in progress. Best place to get that, I tried that one, is get book number 2. That's got everything in it. Labu, not found. It just might not come up on this service. So dust, you have to kind of anticipate what might be happening here. First of all, you've got this downtrending channel, which coincides with the 50-day moving average. Now you had a gap up doji in the overbought condition and a bearish engulfing signal. So you have a left-right combo right smack dab on the 50. If it opens weaker tomorrow, you probably got a quick trade back down to the T-line. Then you just watch to see what happens at the T-line. If they do a J-hook pattern, then you know your fry pan bottom, cup and handle is in progress. Hang on to your individual chart requests. We will take care of them when I tell Jim to do the double line. Then you type them in. You can type up to 2 symbols. And Tuesday morning, more pronounced as far as it came up, hit the resistance level, hold back. I just watch to see if this stays above the T-line. If it comes back up through the 50, that's when you want to start buying. At least you know you have at least a % move like this one. Okay, so some other charts that look good right now. There's the typical, there's your J-hook pattern. Wave 1 and wave 3, approximately the same. Broke through the 200, and where did it come back to? Well, we can see it did a doji and a hammer type signal, now bullish confirmation. What's it telling us about the 200? It's probably acting as support. We could be buying this one on positive trading tomorrow because everybody, so how do you count the waves? This is, to me, is wave 1, wave 2. If I was buying right here, I'd expect this wave to be approximately the same as wave 1. Now, we're starting to see another J-hook pattern. So how do we calculate this one? This, to me, is wave 1. This is wave 2. Looking for wave 3 to be the same as wave 1. I'm going to put a little star next to that one. ICPT, same scenario. We got kind of a bobble, bounced off the 200, so supporting right off of the 20. Really couldn't close below the T-line, and now we're trading back up again right here at this resistance level. And what did we do once we got up to the 50? Showed it was going to act as support, so what becomes your next target? Up here to the 200-day moving average. So these are just kind of observations to say that if human nature works the same time after time, and you can identify which support and resistance levels you're actually visually watching where the investor sentiment is buying or selling, makes it a lot easier. It puts that much more probabilities in your favor. Like this chart, because notice how it's supported on the 50. They gapped it down and brought it right back up above the 50, and today they went positive. What did this day do? Took out a lot of the indecisive sellers in here. So when they take out the sellers, what happens? There's not as many sellers in the way. That next move usually becomes fairly strong. Dean Foods, kicker signal. And this one was more to illustrate the fact that we did a kicker type signal out through this resistance level. So if this opens positive tomorrow, after kind of a doji spinning top, what's that tell us? It tells us we've got that flutter kicker in progress, which is a very strong reversal breaking out through this level. That tells you there's probably a lot of running room in this one. BLT, kind of the same scenario. Let me make this a little bit smaller. You got pretty much this downtrending channel. Now you gapped up today through the 50 and the T-line. What do we know about the doji type day? They open this pop immediately because that would tell you they're breaking out through this level. So you've got kind of a fry pan bottom setup. Now you're breaking out to the upside. Okay, Dean? A good, strong uptrend. Dean Foods always has a good kind of a warm spot in my heart because I think it was, I can't remember, was it 2 summers ago that we had started buying Dean Food at 12. It stayed above the T line until it was a sell signal at 17. Didn't know enough to short it, and it came all the way back down to 12, which was the 200-day moving average. And then while we were up at the private training sessions at Cuca Lake, it did a buy signal right on the 200-day moving average. So we started buying again, and the next day, I guess they announced earnings and popped right back up to 17. So everybody that was at the private training session pretty much paid for their whole session there in that one trade. So it's not that we knew that there was anything going on. It was just we followed what the charts were telling us and put us in the right place at the right time. What did I just do? BLT. All right. HZNP. You can see the gap up, then another doji. If they open up positive tomorrow, what do we have? Potentially a doji sandwich telling us the 50 is not acting as resistance. Likely the next target is the 200. But when they start gapping them up, that tells you somebody's trying to get back into these stocks with great enthusiasm. And that's exactly where we want to be, is in a stock that's got great enthusiasm coming into it with a lot of upside potential. Keep an eye on this one, SRPT. You can see what's happening right here. Support, hammers, now coming back up. I'd look for your next target to be up here at the 50-day moving average. We'll get to HA in a little bit here. Paul, hold on. SSTK. This is why we like these little kicker type signals. It tells you there's a lot of energy coming into it. Same thing as SLCA, little kicker type signal. Now a J-hook pattern. That's why we reiterated a buy today on this one, because notice what it did on Friday. A bullish engulfing right off the T-line. We're still coming off this kicker signal, and if they opened positive and traded positive today, what was it setting up? It was setting up that J-hook pattern, which meant where was our next likely target? Up here at the 200-day moving average. Okay. ATN, there's that little kicker type signal, very strong price move. These are very indicative. Either you call it your best friend, which is a doji gap up, or a little kicker type signal. The results are usually the same. It's usually going to be a very strong price move. Something's happening here. Oh, Maria, yes, we're in the session right now. Okay, and PACB, PACB, nice fry pan bottom. If you're buying this one, we're just about at the this little breakout level. And we're not looking for it to break out through here, and if it breaks out through that level, wave one was essentially about 4 points. 4 points from here would take you up into about the $12 range. W wave also setting up. Gap up through the 50. If it opens positive, at least you know your next target is the 200. But if they start moving this positive, that's our first target that even if it fails here, at least you can come out with a profit knowing that you were in the right direction at the right time. If it goes through, a lot more upside because of the gap up off the T-line. TROX, oh, pick this one out because you got kind of that flat handle. I'd start watching for a little scoop pattern. So I'd be more apt to start buying this one if it came back up through the 50. So that one's on the watch list, as well as Wayfair. Notice what it's doing. Nice strong move, kind of a J-hook pattern, and we're right at the breakout level. But if they start trading this one positive, expect wave 3, the same magnitude as this wave right here, to start in progress. I guess start in progress. That's kind of a redundancy. RLYP is a good example of doing a doji right here in the 50. Kind of gapped up to the high end of yesterday's or Friday's trading. Makes this very simple. If it opens positive, you've got kind of that flutter kicker, but it's basically telling us that the 50 is not going to act as resistance. Now making the 200 your next target. And MRTX, you can see how they're staying above the T line. There's your piercing signal. And where did the piercing signal bottom out? Right smack dab off the 50. And today they told us they're moving positive right here at the resistance level. Makes this one also very simple. If they open this positive, more than likely they're breaking out, and your next target on this one would probably be back up here to test the highs. And MGNX, J-hook pattern, strong price move. Where did the buying start? Bullish engulfing right here on the T-line / 200-day moving average. Bullish confirmation today. If it opens positive, what's it telling us? That wave 3 is in progress, same magnitude as this move right here. So these are the type of patterns we're looking for. Now, for example, we saw that same pattern in HA. We had the classic fry pan bottom breakout. So the question, I'm sure, is what happens with HA? So the answer, or the rhetorical question to that is, what is this signal right here? Anybody? That's right, no signal. So what are we looking at? That even though it closed below the T-line, what's our reversal signal? We need to see a candlestick reversal signal and a close below the T-line. All we did was see a profit taking with a close below the T-line. Now that gives us a little bit of concern, but it's telling us that this is probably not a reversal signal. This is probably just a down day in an uptrend. So what's the strategy here? If this one opens lower, we'll take profits. If it opens and starts trading positive, that just tells us that this was a down day in an uptrend. Okay, some of the other ones that we're following. Weight watchers. Remember, we started buying again. I didn't get the first move, but this is the advantage of knowing what should be the results of a pattern. Big price move, consolidation, and notice what was happening during the consolidation. Just indecisive trading. And notice what our pattern was right here. We had a bullish engulfing signal, a doji sandwich, and what do we know about a doji sandwich? That there's going to be more upside. Do we expect this type of move that quickly? Definitely not. Well, I shouldn't say that. We anticipate that we're in a situation where we're looking for big moves. This just puts us in the right place at the right time. Yes, all the, Marcel, this is all available on all the charting systems. Our programs or our formulas are on TCNet, Metastock, NinjaTrader, Thinkorswim, TradeStation. Oh, I know there's one or two more. The one I'm using right now, this is CQG, which is kind of the grandfather of all of them. And a lot of the charting services use their feed off of CQG. And the only reason I use this is because it's hard to teach an old dog new tricks. I've been using this for years, probably 12 years. I don't recommend it to people because it's about $1,100 a month, but I just hate to have to learn how to use something else and have it go as fast as what we're using on this one. New technical indicator for WTW inverse to price. That's right. Yeah, the OFI's wait. Sal, the rhetorical question is, what signal is this right here? And the answer is, this is not a signal. If this was some sort of signal that had any compelling results, we'd be looking at it in the rest of the 50 or 60 candlestick signals that the Japanese rice traders have pointed out to us. But there's nothing there. This is just a down day in an uptrend. Even though the stochastics are turning down, we haven't had a candlestick sell signal and a close back below the T-line. All we've had is a close back below the T-line. Now, does that mean I don't get ready to sell? Yeah, if they opened this lower and started trading down, I'd close it out. But I wouldn't be ready to turn my back on it. I'd watch to see if they don't turn it right around and bring it back up above the T-line. So the stochastics, yeah, the stochastics, we're not trading stochastics. We're trading the candlestick reversal signals. This just tells us we're not even out of the, didn't even get out of the overbought condition. I just keep an eye on this one. Okay. All right, Robert, we just went through that. Why is this not a sell signal? Yes, win. I'll get to win here in a little bit. Anyways, the answer is this is not a sell signal. If you read through, especially your 12 major signals, yes, we need both a candlestick sell signal and a close below the T-line. We don't have the sell signal. Well, it's moved a good distance away from the T-line, but what type of pattern are we in? If this is wave 1 and this is wave 3, there's probably another 2 points left to the upside on this one. Then you start watching for your sell signal. Elsie, no, if you stopped out on Ha, that just puts your money back to being freed up. So you've got the opportunity now. Now, if you'd put your sell stop right there, and you stopped out, and it didn't come back up through, all right, no damage done. Now what you do is you watch to see which way they're going to take it. If they start taking it back up, you can always buy back in. There's a lot of times where I'll be glad to give up 60 cents, 80 cents, or $1 when it's moving against me, and then buy it back. So I missed out on $1 worth of profitability, but I kept myself from holding on to something that was going to take another $4 from me. So I would rather stop out and then see what it does from there. You can always buy back. If this is or even from here, if this is a 10-point move and we only get $8 out of it, at least we know when we got those $8, it was in the direction that we were expecting it to move. Would you put a buy stop above the T line? Not necessarily unless you can't be in front of the desk all day. If I couldn't be in front of the desk all day, where would be a good place to put a buy stop? Probably halfway up this candle. Because if it was able to come back up that strong, number one, it's telling us they were back up above the T line, and number two, they were negating all this, or negating the selling of today's trading. Yes, looks like a doji sandwich set up on WTW. Could be. We don't know. If you own it, very simple place to have your stop. Shouldn't come back below today's low. That would tell me that that was profit taking. If it opens positive, yes, it looks like this day and this day would be the same, which would be approximately that same price move. Can you use the 3T line? I've never used the 3T line really for a buy stop. I just use it to kind of be a visual confirmation that it's moving in the right direction. On HA, yeah, you could do that, but that only because that kind of coincides with the halfway point of the today's candle. All right, let me get on to a few more here. AMBA also did a nice little, or showed buying today. Morningstar signal as it pulled back to what would be considered the support level. You drew your line right down through the resistance level. It's pretty much now where the support level is, also the T line. I wouldn't be afraid to be buying this one on positive trading, knowing that your next move is up to the 50-day moving average. Now, is that a big percentage move? I don't know. Nah, that's only about 5, 6, 7%. But it's not. Doesn't mean that's my criteria for getting her out if it hits the 50. It might be that's just the first target. That we're now starting to see this downtrend is over. Now we're back into an uptrend. TTPH, another position that we're holding on to because we've had this big fry pan bottom, little fry pan bottom, still likely heading up to the 50-day moving average as our next target. And as you can see, it had a healthy day on a market that was very soggy today, usually based upon the fact that this is in an uptrend with patterns behind it. SGY, there's the fry pan bottom. All you can do with this one is stay long until you see a sell signal. And I wouldn't be too concerned about seeing a sell signal until we get the stochastics back up in the overbought condition. We mentioned this one earlier. This is still a buy because it's just now ready to break out of a J-hook pattern. And we've had the kicker signal. Makes it very simple. We just stay long until we see a sell signal and a close back below the T line. Now, when that was a sell signal, that was your doji followed by a gap down. Now, it is on the 50. However, notice what type of pattern it has created. We've got this little wedge formation in progress. So what's that tell us about our energy in this stock? It's kind of lost its energy. It might be moving sideways for a while. So I did close out most of this position today when it closed down here at the lower end of the range, because the probabilities of it heading higher became diminished by the fact that they did gap it down. Stochastics are heading down, and we can see that it's in a wedge formation. Anytime I see something in a wedge formation, what's that imply? That we're moving sideways, not up or down necessarily. Copa was one of the airlines that fell into that category also. Kind of back into a sideways mode. We closed this one out as it closed back below the T-line today, because what did it tell us about the direction? The direction's not up anymore. It's just not up. It's sideways. I wouldn't short it yet unless it broke down through the 50-day moving average. Let's see, we did is Copa a bearish J hook? No, not really. It could be, but I would still, I'd still want to see it break. We're that close to the 50 and the support level. If I was going to short it, I would short it if it came down through below this level. All right, let's see. Did I have it? Oh, so we got. Oh, here's another one. When you see that big gap up, this is the message. This is another little. I guess this is going to be added on to, I forget which one. Probably the 45 degree. Let's notice the message. Doji gap up, but it was a dark candle. So everybody said, well, isn't that bearish? Not really. Notice what the message was. They gapped this up huge. This is Amazon. Then backed it off. So when you have a big move like that in a stock, is it unexpected to see profit taking? Definitely not. What do we want to see? We want to see when the profit taking is over to confirm that this message was in progress. So this was the place to start buying, because the bullish Harami told us the selling had stopped. This had told us there was very strong buying coming in. And what was our next move from there? More than likely a 45 degree. Are these in transports ETS, or what does it mean the transports will be down? Are these? No, just because there's a few stocks that are down in the transports doesn't necessarily mean, the transportation index came back up strong going into the close, reading a doji. So just because you're looking at one stock doesn't necessarily mean the whole industry is going to be down. Southwest backed off, but stayed above the T-line. Let's see, Ha backed off. That's not it. CX, is that it? No, darn. Can't remember what some of the railroads are. Isn't Amazon consolidating? Not really. They actually backed off and then came back up and still trading above the 3T line. The relationship of the transportation index is that usually it's a prelude to what investor sentiment is going to be, because simple logic says if everybody thinks the economy or the economy is getting better, what's going to happen to the transports? That means they're going to be shipping more products, so they start buying the transports. So it's usually a good indicator of what the economy is doing, or anticipated what the economy is doing, which means if the transports aren't selling off, the rest of the market won't be selling off. Who knows? UNP, Union Pacific. Yeah, so Union Pacific did a big long-legged doji today in the oversold area. Nick, if it starts back up, then we're just picking out. Yeah, that had a double top. That was the failure of your J-hook pattern, which moved you to the downside. But now, notice where the long-legged doji occurred, in the oversold area, and right about the same level it bottomed out before. So those are all pieces of information that you can see graphically. So here's another message. Big gap up on LXRX, sold off, and then what happened today? Told us the selling was over. I would expect a 45 degree to come off of here because of this message right here. All right, on the short side, this is why when you get up in the overbought condition, and you get to a target, watch to see what type of signal you have. Shooting star doji. So here's some of the stop loss techniques that you want to use to kind of protect your profits. What do we know about a doji? They're going to move it in the direction of how they open it. Except we're up here in the overbought area. We've already hit a resistance level. And they open up positive. Oh, that looks good. But where should they not trade this at all if they've opened up positive with a doji in the overbought area? Number one, they probably shouldn't trade it back down through the doji, or definitely not through the low of the doji, because if they open up positive and they start going in this direction, what type of signal are you going to have? You're basically going to have a doji bearish engulf in your left-right combo. So you put your stops right here, because that's where it shouldn't be moving after the doji. Yes, the message is usually the red candle. And that's why we call it the message, is because a lot of people look at it and say, oh, isn't this a bearish candle? So if we were looking at, oh, pshaw. We're looking at this, we're saying, oh, they took it up, they were selling it off. Except they took it up. Now what we're doing is looking for that 45 degree. Is a 45 degree just a price moving up in about a 45 degree? Yes. That's why we just call it a 45 degree. The 45 degree can be like this or like this. It's just kind of a steady move afterwards. Kendai was one that we liked. Today, they gapped it down on kind of a kicker type signal to the downside. So this pretty much told us this is not the direction they should be moving in, especially gapping it down below the T-line and below yesterday's open. That usually tells me get out of the position right away. The only way to stay in the position is if they open it here and in 30 seconds they start moving a positive, I'll stay long to see how long they're going to move it positive. Maybe they're going to bring it right back and do a belt hold. But if they open it and start moving positive, I'm watching to see everything they can get through, but then I just put my stop at where it opened, because if it comes up and then comes back down through the open, that pretty much tells me the bears are still there. I want to get out of it. Yes, the gray line is the 20-day simple moving average. TA, there's that kicker signal to the downside. This is a very viable chart to short now. And where would be the next possible target? You can see there's kind of a trend channel down here, so somewhere down in this range. How long after an open do you enter a particular trade, such as with HA? Enter a particular trade or exit a trade. On HA, the true stop should have been right here at the previous day's low, or down here. Now, that would only been stops to come out as an emergency stop. It shouldn't be moving in that direction. But again, if it moves in this direction, and let's say you stopped out at the T-line, and then turn around, then you could buy it right back if it came back up through the T-line. Now, in that case, I would probably be looking at my 10-minute chart, and let's say right in here it started moving back up, and then you can start buying. But in the case of this one today, again, there was not a sell signal. So there's always some likelihood without a sell signal they come back down to the T-line and they start bouncing it back up. Yes, the longer the uptrend, the more compelling the sell signal needs to be. So are there days where you're in an uptrend and they can close it back below the T-line? Well, if they've been up above the T-line for quite a while and you're in a strong uptrend, and there's a day where they did close it below the T-line, say, all right, this has been strong. They've been up above the T-line this whole time. They close it back below the T-line today. I'm going to give it one more day. So instead of selling here, maybe I sold here. So I gave up a little bit more. But on the other hand, if they open here and start taking it right back up, pretty much tells me this is just a down day in an uptrend. As a general rule, you don't necessarily wait for a particular amount of time. No, because there's different elements of when the market opens up. The oh, I forgot. I was reading Chuck E. Cheese copyright. If your stop was not set at open, you got hit. And now I'm way distracted. No, there's 4 different quadrants for opening. Either one is if you're looking to, if you think the market's in an uptrend and you're looking for it to open positive, and the stock that you're looking at has a buy signal, looking for it to open positive. Well, if the next day the market opens positive and the stock opens positive, I'm probably buying within the first 30 seconds. On the other hand, if I see a buy signal in a stock and it's opening positive the next day, but the market is opening lower, I'll wait a little bit to see if they're still buying even though the market's selling off. Or if the market opens higher and the stock we're looking at to buy opens lower, it means the bulls aren't there just yet, or confirming. But if they start buying and bring it back up through the previous day's close, creating another little white candle, that tells me the bulls are still there. They just happen to open it lower. Then I can be buying. And then the 4th quadrant is if the market opens lower and the stock opens lower, I'm not going to do anything. That means nobody's buying that day, so I don't hit anything on that day. So we know that there's signals that are very strong, like the kicker signal, which we also know you shouldn't see it trading back below that level. So if you had bought the kicker signal and then the next day it sold off, still didn't sell off below the T-line, but when they gapped it down today, it was trading back below the open of the signal. It told you the bulls were in control. It told you the bears are in control. Get out of the position. Now on a kicker signal, there's an extremely high percentage of the time it's going to go higher. But you also have to know what to do in those little percentages of the time when it doesn't work. You close out the trade right away. Okay, let's see. No, it wasn't a bearish Harami because we're our stochastics. We're not in the overbought condition. That is more of a bearish Harami because the stochastics are up here. That was just a down day in an uptrend, and then they further took it down back below this level. If you found several potential trades and you can trade only 1 or 2 stocks, what is the criteria that you use to decide which trade to take? They all have similar risk reward. Would you prefer one stock pattern over another? Say, are smart? Yes. I've done a video on kind of quantifying which ones are the best ones. To name a few of them. The best one is what we call the best friend, which is a doji in the oversold area followed by a gap up, or a left-right combo, which is a doji followed by a bearish engulfing signal. I've said that wrong. Bullish engulfing signal. Or a J-hook breakout, a fry pan bottom breakout, a kicker signal. So, yes, there's a lot of people say which signals are the strongest or the best. They're all pretty much the same, and we've already kind of quantified them by eliminating the 50 or 60 signals. We've taken down to 12. So those are pretty much strong signals. The strongest out of the 12 major signals is your kicker signal. But then again, as I say, I've quantified some of them, your doji gap up. Yes, we will do a scanning seminar. As a matter of fact, I was on the phone with Pat we will be doing some special sessions for option traders here in the near future. I don't know if there's a Thanksgiving is on Thursday this year. Ha! Maybe we will be doing a, let's see, we've got stuff going on. Yeah, now that the winter is starting to set in, I say starting to set in, it's been still nice fall weather up until tonight. We'll be doing sessions on Tuesday and Wednesdays. I know, Robert, that was being diseases. If you have a gap up after close on 3x the hourly volume like SSTK with huge volume above it, what would you expect tomorrow? Did it gap up after hours? I don't know, still. See, here was the buy signal, the doji gap up, and this is why we do sessions on the gaps. A lot of people say, "Oh, I stay away from gaps because you don't know what's going on." If you know what the signal is and why it's gapping up, that's your best friend. Having the knowledge of what should happen or what type of pattern it's going to create allows you to take advantage of those gaps. That's true. Okay, November 18th is an intro to option strategies, and then we're going to try to do for the options group, do the credit spreads, when to use those most effectively. Whoops, I'm still doing some of these. Hold on for a second. Boot. Observe the obvious. There's a resistance level. This is in a downtrend. And we did a bearish Harami, and then a doji slight gap down, but back below the T-line. Where's your next target? Right down here someplace. So why is this so obvious? Because we can see which way they're already been taking this. They've been selling this off, and every time they bring it up to a resistance level, we see sell signals. That tells you they take it down to the next support level. That was boot. Las Vegas Sands also had the bearish engulfing signal after touching the 200. Doji, little star day, and then a gap down. This makes this one very simple. If they start trading this lower, telling us the 50 is not acting as support, there's our next target. What started the uptrend? The kicker signal. And I think that was the same type of chart pattern with MPEL. Bearish Harami, this level, then kind of a double doji sandwich. So if they open this one lower, there's our best friend, the doji gap up. Started the uptrend. That could be now your target on the way down. Are these sessions a part of the monthly service? Yeah, we do Monday nights for the members. We do Thursday nights for everybody. But then the training sessions that we do, like Tuesday and Wednesday, are usually just for members, which could be scanning, stop losses using candlesticks, entry and exit strategies, how to set up your how to do a option spread versus just buying options. So all this information is in video form at a discount for members, but we do them also live. That way, if you've got questions, that you can get them answered there right away instead of having to come back and try to remember. Would you short Kendai? I think so. If this opens lower, here's another easy observation. Notice how they took this down and brought it back up. Told you the bulls might be stepping back in. But if they open it lower, what's that telling you? The bulls lost. The bears are still in control after the kicker signal. I would suspect they're going to be taking it down to the 50-day moving average. Las Vegas Sands, yes, if this came down through the 50, you can start shorting this one because that would be telling you after the bearish engulfing kind of double doji sandwich that the 50 is not acting as support. Oh, Kevin, no, I just went through years of just wanting to learn how to invest correctly. And the problem was when I started learning how to invest, you had the old, what would I say, that the way to invest correctly was listening to the brokerage firms, and they profess that if you bought good companies with good earnings, good management, blah 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 blah, that you're going to make money. And then when I came across candlesticks, I could start seeing the philosophy of most money managers, which had no idea which way the market was going or which way a stock price was going. That's why they always say you can't time the market. That's because they don't know how to time the market. When I started using candlesticks, which is nothing more than the graphic depiction of human nature, your probabilities of being in the right direction at the right time is just immensely improved. So yes, I would look at this one, except, again, I'd be looking at it on the basis that this might be in a wedge formation, that if it broke down or started selling off, and maybe, let's say, even came down through today's low, then I'd be going short. But then I'd watch to see if this became the support level. Oops, I had some more here. Oh, Kohl's. I'd be more apt to short this one because same scenario. Which direction is this trend going? There's your kicker signal after a long-legged spinning top. And they brought it back up to the 50. What happened? A bearish engulfing signal, double doji. Now look where we're sitting, right on the support level. If they open this one lower, I suspect your next target is down in this range. I did see the light with candles. And I guess, Kevin, the reason I like to show people this is just for my own ego, that at one time being the worst investor in the world, and now I can make money consistently. It's I guess it's more amplified by the old saying is, it's like beating your head against a wall. It feels so good when you stop. It feels so good now to make money, where I used to be the contributor to the markets. Now I know just by seeing the charts that I was where I was doing everything backwards. That's Macy's. Notice the hanging man, doji, gap down. I'd look for more downside to this one. Alcoa, failure at the 200. I would suspect they're coming back down to this trend channel. Bearish J-hook pattern. Cyber. Big bearish engulfing signal. Which way is Cyber moving? It's been in a downtrend. Where's the next level? Right, still in the downtrend down to this level. Flamel, maybe Flamel. You can see where the failure is occurring. There was your doji bearish confirmation below the T-line, left-right combo, stochastics heading down. I'd short this one, and if it broke this level, I would suspect wave 1 and wave 3 are going to be about the same. Chuck E. Cheese, no. We'll just wait until I tell Jim to do the double line, then you can type in 2 requests. And didn't we do that one before the close or after the close? It probably hasn't changed all that much since then. And Joy, observe the obvious. The obvious is in a downtrend. What happened when it hit the resistance level at the 50? There's your evening star signal, bearish engulfing. You're right on this trend channel. Stochastic's heading down. If it opens lower, right, one target is your filling the gap. Next target is testing the bottoms, and then potentially coming down to the bottom of this trend channel. And Micron. There's also that bearish doji. You got a kind of a dark cloud. Then your doji, bearish doji sandwich. I'd look for this level right here to be the next target. Let's see. That's right, Santa Claus. We're getting to the point pretty soon. We'll do the Christmas special. Anybody that would like to get who is Santa and how did he get to the North Pole, we'll send it out to you as long as you put a good review. No, I shouldn't say that. If you like it, you put a good review on Amazon. If you don't like it, just don't say anything at all. Which my mother always said, if you don't have anything nice to say, don't say anything at all. All right. So tomorrow, we have to see what the pre-market futures look like. Because just because we close below, that's a good indication we're probably going lower. But we also have to go with the fact that we've been in a steady uptrend. We better see some compelling selling tomorrow. If it opens positive and starts trading positive, it's pretty much telling us the T-line isn't going to be breached. Okay, were there any general questions on candlesticks that I missed in the process? Hold on to your individual ones. When you set stops one halfway down or up the previous day's candle, are you referring to the bottom? Yes, the body. Remember, the most important aspect of candlestick analysis that the Japanese rice traders provided for us is the candle is where it opened and closed. Those are the two major decisions. The wicks are just the trading range during the day. So the candle body is the actual decision-making part. Yeah, but volume doesn't make a, Roger, volume isn't a major factor because we're not trading volume, we're trading price. But again, right now, there really hasn't been what I would call compelling selling going on, and especially with the fact that the transportation index held up pretty well today. But here's another element of the doji at the end of a flat trading range. It's usually very indicative of what the trend is going to do based on how they open it after that last indecisive day of a flat trading. From your experience, are kicker signals that have the bigger gaps up or down more compelling with a bigger move? Yes, but also things like this is what we're kind of looking for, is that this day is substantial and this day is substantial. So that type of kicker signal is more compelling than this type of day. Well, this is almost where we had a smaller down day and then a big up day. It's still just as good. It's just, had this been a bigger candle, it would have been that much more compelling. That wasn't really the one I was looking for. There was another one not too long ago that started up strong with the let's see, this one. Whoops, if I could make it even big enough. But this technically is a kicker signal because they had a little dark day, but it's more a doji gap up, so that would be more of your best trend signal than a kicker signal. A belt hold, I'm trying to think of what belt holds. Oh, can you remember which chart the belt hold was in? Or a belt hold? Yes, TNAT had a belt hold. A belt hold is when you see that they've gapped out significantly out of the trading range. And then they come back up into the trading range. Now this was, I considered a belt hold because day 1 and 2 brought you right back up into the trading range. And the significance of this type of pattern, the reason they call it a belt hold is because the Japanese rice traders think of the bulls and the bears as two sumo wrestlers. One's trying to back out of the ring, and the other one grabs his belt and pulls him back in, and they're off and running. But I don't think Exoma was a belt hold. I think that was more of a bullish engulfing signal. Yeah, that was more of a bullish engulfing signal. A belt hold is usually when they trade it way out of the trading range. That's right. If Oprah loses weight, she'll need a belt hold. No, I forget where I was. So what happens when they wipe out all these sellers down here and start buying back? There's not as many sellers in the way. That means the next move is usually pretty strong. Roger, a belt hold can be a piercing signal, and it can be a bullish engulfing signal. And I know I should have examples of those somewhere, but they can be a belt hold piercing signal combination or a belt hold bullish engulfing signal combination. And we may come across those. I'll keep an eye out for them as we're going through some of the charts. All right, so with that, Jim, go ahead and do the double line. And then 4.8 seconds, do another double line. Okay. Schwab, you can see was out of a fry pan bottom, and notice what it did on the best friend signal. Gapped up through the resistance level. Expect a 45 degree to stay off or come off of here. And Disney, this is what notice what happened here. This is a perfect example. In this case, it was a bearish engulfing signal that closed below the T line. Next day, they traded indecisively. So had I closed out here, I would have been buying back on this day. Now, did I give up some profitability? Certainly did. But at the point that this did a bearish engulfing signal in the overbought condition, told me my probabilities of it heading down were a heck of a lot greater than going up. But when they turned it right around and came back up above the T line, that told me the probabilities again was the uptrend was still in progress. So, whoops. Big bearish engulfing signal on MNK. And just remember, the bigger the signal, the more compelling there's been a change of investor sentiment. And where did this investor sentiment obviously occur? You got an evening star signal that just hit smack dab off the 50. Another evening star signal right off the 50. And a big bearish engulfing signal. And what was the trend prior to this? Obviously a downtrend. So now where's the next likely target? Could be down in this range. Oh. I'll go back to Disney. This is where I've learned in the past, I mean, it hurts, not hurts, but there's an ego problem. I'll say we have, and I'll say we because I always had it. But if I took my profits here, boy, I wasn't going to get back in because they weren't going to fool me. But now if I can see what the pattern is or what the graphics are, especially with the T-line now on my charts, I'll get back in because that just told me we had a day of profit taking. What was the chart telling me overall? That we were in a good uptrend. There was profit taking. Then they brought it back up above the T-line. That pretty much told me the profit taking is over. The uptrend was still in progress. That's why on HA, we've had a good strong uptrend. It closed it below the T-line. That's why I'll give it another day to see if they don't bring it right back up again. BABA did close below the T-line. We closed out some of this, but notice where it bounced off the 200. We won't give up on this one because what type of pattern has this been doing on the way up? Well, it started with the left-right combo, broke through this downtrending channel. There's our J-hook pattern. There's wave 1. There's wave 2. There's wave 3. Now, what's our criteria for going through a resistance level? They'll come back and test it. If they start trading positive again, we'll be buying back into this one because now what do we have? Wave 1, wave 2, bouncing or supporting on the 200, going into wave 3 of an uptrending stock. So there are times we'll close out when the profit taking starts. We don't know how long that profit taking is going to be. Same scenario on this one. Profit taking, we knew when they started selling up here, they were more than likely going to come back and test the T-line, which they did today. Now, if they start trading it positive, what type of pattern do we expect? A J-hook pattern. I would suspect that was Tesoro, that Valero, somewhat the same thing. Now, here's another case where, notice where we were. We had a doji in the overbought condition. Opened positive, maybe. I think it opened positive. I hate that thing. Started trading up. Very simple. Put your stop loss back at the open because if it comes down through there, that tells you the selling has started, which was the warning that the doji told us. That if they could come back down through there, where were they taking it? Probably back to test the T-line. VRX actually traded up today, but not with any great urgency. I would still stay short. Now, if it opened positive tomorrow, because the market was opening positive and this one was opening positive, if I was short, I'd cover the short position and then just watch to see what it does once it did get to the 200-day moving average. OC, LR, the gap up, kind of the message, then they took it back up. All you can do with this one is stay long as it stays above the T-line. Zixi, J-hook pattern. That one is probably going to get a little star next to it. Notice what they couldn't do over the last few days. On the pullback, which was indecisive, they couldn't close it below the T-line. Now they're heading back up. Wave 1, wave 2, going into wave 3. Fold. Fold did a bearish Harami today, making this one very simple. If they open this lower tomorrow, you close out the position and wait to see what it does once it gets back to the T-line. Worst case scenario, it opens lower, then turns around, put your buy stop back up here. If it came back up through there, that tells us the bullish Harami or bearish Harami is not in effect anymore. You buy back in. Again, going along that same theory that if a price moves 10 points and you only get 8 of it, but every time you get 8 points, it was a high probability trade, your compounding effect will be tremendous. XOMA, if this opens positive tomorrow, you definitely want to start buying because that tells you that this big fry pan bottom whipsaw, and that's not unusual to see this type of whipsaw action at the end of a fry pan bottom because this is where lots of indecisive is being washed out. They break out, they pull back, and then whip it right back up again. I'd be a buyer of this one on positive trading tomorrow. Bought some today, and we'll probably buy some more tomorrow. LOCK. All you can do here is stay long as it stays above the T line. Whoops. KPTI. All you can do here is stay long as you stay above the T line. Now you did a long-legged doji in the overbought condition. Makes it very simple. If they came back down through the T line tomorrow, close it out, because that tells you that after the long-legged doji right at the resistance level, they weren't breaking out. They were going back down to test something like the 50-day moving average. Hot closed right on the T line. Makes this one very simple also. If it opens lower, you close it out. If it opens positive, get ready to buy, especially if it comes back up through the 200. This has been the weak sister of the airlines, American Airlines. This one, you get ready to go short. Notice the bearish double doji sandwich. If they open this one lower, I'd expect they're coming back down to test the 50-day moving average. The Canadian dollar. Oh, I forgot to do the other ones, didn't I? The Canadian dollar still in a downtrend. The U.S. dollar. Notice the J-hook pattern. Notice the bullish harami telling you the selling had stopped. The doji sandwich back up through the T-line, up through the 50, came right back to the 50 and the T-line and did a J-hook pattern. You just stay long on the dollar until you see a sell signal, a confirmed sell signals. Yesterday, or this is today, that wasn't a sell signal. That was just a down day and an uptrend. No sell signal there, which we're short the euro. Notice the kind of the bearish engulfing, the big breakdown, and notice where it broke through this wedge formation. We're staying short until we see a buy signal. Some of the other ones that I forgot. Gold. Notice the kicker signal right here at the 200. You stay short until you see a buy signal. Let's see. Forget this. Oh. Soybeans, still in a downtrend, hasn't been able to get back up above the T line. And wheat, we traded that for a little bit last week. Failed right up here at the 50, also in a sideways mode. So this one you can get ready to short if they break down through the 50, because we know at least they'll come back down and test this level. Okay, those were commodities that I forgot. Potash, stay short on this one until you see a buy signal. More than likely, though, I wouldn't be long or short this one because there's nothing really compelling until it gets back down into this area. I'd be trading something else at this point. Starbucks. This one, after the long, steady uptrend, now you started seeing sell signals up here. And it was most compelling, even though these weren't solid sell signals, this one was. Bearish engulfing signal. Since then, they haven't been able to get back up above the T line. What's that make your next likely target? Down here to the 50-day moving average. See, we did the euro. We did the dollar. All right. Did those by accident ahead of you. Price line, get ready to go short if this opens weaker tomorrow with the expectation with a doji gap down, kind of a bearish doji sandwich. And notice what was happening up here. This is why when you start seeing indecisiveness, especially in the overbought area, doji, hanging man, doji, this is what became more compelling. Your doji, bearish engulfing, or your left-right combo. If they opened it lower after that, you definitely should be out of the trade because that's a strong sell signal. Even though it might not have closed below the T line, you could always buy it back if they undid that bearish signal. That's not the right word, undid. Negated the bearish signal. There's your kicker type signal. Notice it consolidated right back to the 200. Expect a 45 degree to come off of there. There's a gap to fill all the way up in this range. And Tesla was selling off today. Failed right here at the 200. If you're ready to go short, just watch to see what it does once it gets to the T-line and make sure it doesn't bounce up from there. Did I do a BCO? Oh, yes, we did that. All right. NetEase, just stay long. Very simple. Just stay long until you see a sell signal. AMAT. AMAT did a doji right now in the overbought condition. Right here in the T-line. However, notice where they opened this one today. They closed it up here on a bullish candle. Then they gapped it down to the lower end of the range. If they open this one lower tomorrow, you start shorting it because now you have your bearish flutter kicker probably bringing you back down toward the 50. Amdocs, I probably wouldn't be long or short. Now that is kind of a belt hold right there where they gap it down and bring it back up into the range. Except Amdoc just doesn't have the volatility or the price movement to make it really any great trader. APA, you buy this one on positive trading, especially if it came up through the 200. That your flutter kicker, J-hook pattern would be telling you that there's no more resistance up there at the 200. It's going higher. I think we did LXRX because it did a message yesterday. Today they told us the message was over. The uptrend was still in progress. And this one did a bullish engulfing yesterday. Today it confirmed, or on Friday, today it confirmed. Stay long on this one. G-Pro's been having a little bit of problem getting back up above the T-line. But remember, when you see at the bottom of a downtrend, they gap it down, start watching for your buy signals. So this one, if you're buying on positive trading tomorrow, up through the T-line after your bullish Harami, bullish confirmation, just watch this downtrending channel to make sure they can get up through that level. And NXPI, NXPI did a doji right as it came back up to test the T-line. Makes it very simple. It's going to move in the direction of how they open this one tomorrow. Oh, Victor, I meant to call you this afternoon. DXCM. Nothing here that would get me excited one way or the other. There's just nothing there. And the overall chart pattern tells you there's really no great trend movement. This one, there's your big bullish engulfing. Wave 3, you stay long on this one. At this point, I'd have my safety stop at today's open. We're not quite in the overbought area. I would anticipate there is still more upside to this one. Because now you've seen the bottoming action. And the bottoming action is you have a lower low, a higher high, lower low. Now a higher high and a higher low. And then another strong signal. Your uptrend's in progress on this one. CX, stay short. You can see where the resistance level was. You can see where your downtrending channel, you're getting close. But right now, it stays short until you see a buy signal. BlackBerry. Right now, you can stay long on this one. You do have a doji. You broke out through this level. I'd still use the T-line, even though it's a good fur piece away. Still use the T-line as my stop, just as long as it's in an uptrend, as long as it stays above the T-line. VTL, bullish Harami, you're in an uptrend. They really haven't been able to close below the T-line. So even though they closed it below the T-line, had it opened lower, started trading lower, you close it out. In this case, we saw they opened it lower and took it right back up. I would use today's open as my stop. If it came back down through there, that told me this trend channel is in progress versus a reversal. And Navi, I'd be with the idea is coming back to test the F50. And BIB, has to open positive tomorrow to do the J-hook pattern, or telling you the 50 is acting as support. If it opens lower and starts trading lower, that means this is still failed. You come out of it if you're trading BIB. Or basically a positive open tomorrow tells you the industry is acting stronger or weaker if it opens lower. American, you can be ready to short this one. Twitter, right now you want to be short this one with the expectation it's coming back down to test this level. But as you can see, it's been in a long downtrend. Now you've got a dumpling top in progress. We did GPRO, SWKS. Right now you stay long. At this point, I'd use the 50 as my stop until the T-line catches up. And Walmart, just never trade this one. There's nothing here. I wouldn't be long. I wouldn't be long or short. You're in a downtrending channel, and it doesn't have a big enough percentage to move one way or the other. Goog, as long as Goog stays above the T-line in this 45 degree, again, there was the message, you stay long. You don't want to see it close below the T-line. Delta also has to open positive and trade positive to stay in it. Otherwise, its trajectory has fizzled. Under Armour, yes, you can get ready to short this one with the expectation it could come back down to the 200-day moving average. OPK, I guess it opened higher and closed lower today. You stay long, definitely use the T-line as your stop, because if it closes back below the T-line, pretty much telling us this little resistance level is continuing to act as resistance. AM had been backing off, but it's still in the sideways mode. And right now, that's the problem. It is in a sideways mode. It bounces off the 200, bounces up off the 50. At this point, we've closed out the position. When it failed up here the first time, be ready to buy this if it comes back up through the 200. Now, I know that's a good distance away, but the probabilities are much greater once it gets through the 200, telling you the pattern is working. KKR, another one that I would be out of on weakness tomorrow, because you're back into this sideways mode. NVLS you can stay with, but same scenario. It has to stay above the T-line. If I was going to buy this right now, I'd probably have my buy stop at around 930, knowing that if it broke out through there, it's definitely heading up, hopefully back to the 50-day moving average. JC Penney. Right now, with that big move to the downside, you should be out of this position and not be in it going long. I wouldn't be shorting it here. If I was short, I'd be ready to cover it, especially if they came back up through today's open. And I wouldn't be going long until they could close this above the T-line. The Russell closed right on the T-line, which means it has to open positive tomorrow. If it opens lower, Again, kind of sagging back into the sideways trend channel. Did I do enough on there? FEYE. Right now, I'd stay short. I'd use today's high as a stop if I was short. If it came up through there, it's coming up through the 3T line, as well as confirming the bullish engulfing. But there's still not a lot of energy in this one, obviously, with this downtrend in progress. LLTC, I wouldn't probably be long or short. I may have been going long had it opened positive today. I would rather buy this one at 45.20, knowing that it's moving up. That would tell me the J-hook pattern is still in progress. And BOFI, BOFI's had a hard time getting up through the 200. Look for the bobble. If I was long, it better not close below the T-line. If I was going to go long, I'd buy it at 105, knowing that it came up through the 200-day moving average. SCO, short the crude. You just stay long right now. Still not a dynamic chart because the crude isn't a dynamic chart at this point. It's just kind of in this sideways trend channel. FTX, get ready to short this one on weakness. This is your belt hold right here where they gapped it way down and brought it back up into the trading range, more upside. Right now, remember, the bigger the signal, the more compelling they're telling you what's happened to investor sentiment. JWN, stay short. So I think we did VRX. I'd stay short on this one. I wouldn't want to see it open higher, though, tomorrow. Natural gas, still in a downtrend. Can't seem to get back up above the T-line. All right, we'll get most of them. Stay short in Deutsche Bank. We did Navi. NEO, you stay long. Use the T-line as your stop. AVGO. Right now, nothing. I wouldn't be long. I wouldn't be trading this one. There's nothing compelling about this chart one way or the other. And Hyster Yale. Right now, as you can see, they've failed. There was that big bearish engulfing signal. They haven't been able to get above the T-line. If you're short, you stay short on this one. Western Digital. Another one you can go short. There's your bearish J-hook. If they trade this one lower, I would suspect your next target is coming down here to this trend channel, which brings you down into about the, say, the $60 area. We did Valero, Shake Shack. There's your bearish belt hold, bearish engulfing. Get ready to short this one if it opens weaker tomorrow, not holding the T-line or the 50, then look for it to come back down and test the recent lows. Big bearish engulfing signal. This one you get ready to go short on weakness. 50 is your next target. ILMN. You can stay long, but this one has to open positive tomorrow. If it opens lower and starts trading below the T-line, close it out. They've failed. And CVX. Bearish Harami at the 50. If it breaks the 20, you can be going short, making the next target the 50. There's a gap down here to fill. So that should be backing off. Rick, I think we did that one morning not too long ago on a Saturday morning. We did the targets or the projections. We can always do it again. Just keep reminding me. The problem is we get so filled up on dates. But now, again, now that the winter is setting in, we'll be doing a lot more at the computers. With options, do you prefer your stop loss to be based on the underlying stock or the options price? And should they be market or limit orders? David, options are just a mechanism for buying the stock. The reason you were buying the options in the first place is because you should have been analyzing what the stock was doing and then deciding I was going to buy it, or you were going to buy it based on which option strategy you're going to use. So the converse is true. Converse. Opposite is true. That if the stock price isn't doing what it's supposed to, the method for which you bought it was the options, you close them out. Array, if this opens lower, you take your profits, look for the bobble. And I usually do my trades at the market. If the bid-ask spread is pretty hefty, then I'll usually put my limit order in halfway. CPL, another one that I probably wouldn't be long or short just because there's no direction to it, a slow uptrend. I think it was recorded. Jim recorded it. Just get ready for a bobble if it opens lower. That's AT&T. There was your bearish belt hold. And then you're bearish engulfing. You're still in a downtrend. I would suspect this level is your target. Okay. All right, good, Jamie. Oh, it's the members area that we did one Saturday. The members are in free. Non-members have to pay. I think we've got, I think on the 21st of this month, we're going to be doing a Saturday. What is today? I think on Saturday, 21st, we're going to be going through the T-line charts, the bobble, the crunch, all that sort of thing. The 9th. 9th? Oh, today's the 9th. Okay. So, all right. With that, you have training and webinars on options? Yes, and we're going to be having more now that the winter is set back in, showing the different strategies. Not so much, a lot of people want to learn how to do the iron condor and butterflies. My trading system isn't that sophisticated. The reason for that is I don't want to be spending all night trying to figure out what to be buying and selling and how to do it. I want to look at the chart and say, all right, what's the best strategy? Is this a spread? Is this a buying the calls or puts outright? Is this selling the puts for a bullish trade? That sort of thing. David, simply buying the calls and the puts are probably only effective less than 20% of the time. The spreads are probably a lot more effective. Paul, no problem. I tell people, if you learn from your mistakes, I'm probably one of the smartest traders you're ever going to come across. So with that, everybody have a good evening. We will see you bright and early in the chat rooms.